I think that the monetary metals have an historic role. They always have. And that is to retain inherent value, okay, regardless of destruction of the money unit, meaning the inflation in the quantity of the money units. And since 1959, the M2 has grown up almost about 90 to 100% every decade in terms of quantity of money, okay? And especially since early 2020, it really skyrocketed. Now, it's flattened lately, but don't look at it month to month, look at it more broadly. But if you look at the money supply growth since, let's go back to when gold, early 1970s. So let's go back 50 years. M2 has grown 20-fold. Gold has grown 20-fold. Get the point? It protects assets. And I think that it knows, and I'm not the only one to have said, we said this early in the year. Now, yesterday, 2-3 days ago on Bloomberg, Nouriel Roubini, who's a private analyst, a fundamental analyst, has come to the conclusion that the downside in paper assets, especially stock market, due to what the Fed has been doing and what they did before, which they're now undoing, namely inflate paper assets. And now suddenly when they try to deflate inflation, they are. But the inflation they're deflating is paper asset inflation. That it's going to get so out of hand that there won't be an historic comparison. And I fully agree with that. If you go back and look at the 1929 bull market, I think it was from 1923-24 lows up to 1929. Go back and look at the 2000 so-called dot-com bubble. Go back to 1994, look at the lows then to 2000. Go back and look at the bear market lows in 2002 in the S&P, and then the high in 2007 prior to that real estate collapse that we had through 2009. Those advances were doubles and quadruples at most in terms of from bear low to bull high in the stock market. And all during those times, the Fed was definitely pumping money for various excuses and reasons, including in the 1920s. This time, it's a 7-fold increase in the S&P 500 from its 2009 low to the 2021 high. And for the NASDAQ 100, the leader index, it was a 16-fold bubble. When these guys come undone, and we think they're undone, the unraveling of those excesses will be equal and opposite, and very destructive to not only the valuations of those assets, but to people's lives. I saw on TV the other day, they were talking to some middle-aged, middle-class income earner who said, I wasn't able to add to my 401k this year. I needed the money to just pay bills. What they didn't mention is if he had money in stocks or bonds, he not only didn't add money this year, he lost 20 to 30% of what was in his retirement account. So personal pain is going to come from this. And thank you, central banks, for having created this kind of reality. But ultimately, when that reality unfolds, and it's already in the minds of many major central banks, by the way, we've had more gold buying by central banks since the late 1960s, over just the last quarter or two. Incredible amount of not us, not the US, but other governments around the world accumulating tons, sometimes hundreds of tons of gold. Why? They fear what's coming, and they're justified.
That is interesting that you mentioned how it's not the U.S. that is doing that. Why do you think that is? I mean, is it because the rest of the world, I mean, we're on, kind of a dollar standard right now where it's the world reserve currency. The other world is kind of abandoning that, or what is the reasoning why it's not the U.S. buying the gold?
It could be in part what you just said, yeah, that, we're the, reserve currency of the world. Well, that's likely to change. In fact, my bet is there will be no single reserve currency of the world soon. In other words, once the dollar ceases to be the core of fiat currencies, they're all worthless, really when you get to it, but the better of the worthless, okay? When it ceases to have that role, and when major transactions occur around the world in various other currencies, like the yuan, and not just the dollar. For instance, the Saudis, I believe, are going to or already have accepted the yuan for oil. It doesn't take too much to change what we think is an irrevocable trend. No, it's not. The dollar is not guaranteed to be the core center of the world. And I think we may go to a diverse preference of assets to use to pay transactions, not just the dollar. And technically, we argue the dollar is probably already topped by our own work. It made its high 2 months ago, and we think now 3 months ago, and we think it's in the process of decline. That will also somewhat help gold. Although the correlation between gold over spans of time is not always directly linked to the dollar. People make a mistake in thinking that. It's not true. Yes, since May of this year, the dollar has been quite strong, dollar index, and gold has been weak. So that correlation seems to be in people's minds. But over longer periods of time, if you look back, the correlation is really not that good.